Hi everyone, Don Singletary, and welcome to the channel. Got some exciting stuff today in the video. We'll be talking about two things every trader should consider before they begin a day's trading. One optional and one not so much. Also, an exciting live trading session with a Micro Emini, and we'll take it apart and talk about how you manage a trade during its progress. That and more coming up next. The new Micro Emini stock index futures give home investors a chance for the first time to be able to have affordable trading so they can trade the same indexes like the S&P 500, NASDAQ100, and others that professional traders and the wealthy have been using for years. So that's what's new and exciting about the new Micro Emini stock index futures. Be sure and subscribe so you don't miss the notification for the next video. Coming up next, live trading. But first, I want to show you a couple of quick things you can do for some what I call market situational awareness. I put the, the 2-day chart, so I can go back to the previous day. This would be July 1st in this case, a Wednesday morning, and I can see the market went up the entire day in the session before and then continued with that gain or those gains overnight during the Globex session. Now, when it goes up like this, and then you see at 8:30 on Wednesday morning, July 2nd, the market shot up at exactly 8:30. Now, traders in the know realize that every Thursday morning that isn't a holiday, in the United States at 8:30 Eastern Time, the jobs report comes out. And these days, it's especially important. 62 points up, $124 swing in about 3.5 minutes. And, of course, you know, it's opportunity if you're on the good side. And otherwise, you just want to make sure you don't get blindsided because you didn't know what was coming up in the day. So check your morning newsletter or finance.yahoo or some other source to get that. Okay, it's live trade time again, Monday, June 29th, 2020, at 9:07 Eastern Time in the morning before the day session begins at 9:30 Eastern Time. So I decided since the market seemed to be going down a little bit, I would jump the gun, and so I sold a Micro Emini NASDAQ100 at 9:07, and this chart picks up about 10 minutes later here. But you can see you have kind of it wasn't quite a sell signal when I did it, but I wanted to try it anyway. But 10 minutes later, I get this doji. That's the little flat things in the middle. That's technical talk for candlesticks there. And whenever they're flat like that, it means the market's going nowhere, obviously. And so I'm in the trade for 10 minutes, and I'm up $4. You know, maybe $6 at times, $4 to $6, call it. But the trade's not progressing very well. But on the other hand, it's not running away with wild losses either. I'm short at 98.41 and down to 98.38. That's 3 points at $2 a point. That's only $6 there. And it looks like the thing just may go my way a little bit here, and then things begin to turn around a little bit. And you know, I've shortened the time here now. It's been almost 17 minutes since I placed the trade. I did a little time compression here. There it is, 12 minutes at 9:19 is this particular live shot here. Well, what's happening is pretty much nothing. The market's flat. Now, look down on the bottom. See the vertical green lines in the MACD? They're beginning to be the same length and even shortening a little bit. And when I see them shorten, that's a sign for me to bail out on this. So at 9:24, I close the trade, and I think I have a $4.50 loss after 17 minutes. I believe that's what's coming up on the screen next. But it's okay. I mean, this is, why do I show you a trade like this? Because you're going to have some. And you don't just sit there until something bad happens, and you just hope something good happens. Probably a trade I shouldn't even have made, but you're going to do some of those too. So I just thought I would show you how you can think about them. And there's no reason to get real excited about it. Just some trades don't work out, and that's part of the gig. That's what you signed up for. Now, while I have this on the screen, let me show you a couple of things. Over in the bottom right of the MACD, you see the negative numbers right there I've circled. They're not all that negative, minus 2.2, minus 2.8. And they're certainly don't reflect anything strong or strongly bearish, I mean to say. And look up top there, you've got the candlesticks or they just go up and down and they go nowhere. You see that happening, and you see these green lines here begin to shorten. That's a sign of a trend reversal. So you've got no action, no big up and down, unconvincing relative strength numbers, and the green lines are getting shorted, and you get those dojis across the top there. So it's time to bail when that happens, and so I did. It's a lousy trade money-wise here. Lost $4.50, no big deal. But it's a great setup on the screen here because it shows you three ways, and all three of these indicators over there. I mean, the RSI, the bottom scale, the green line shortening in the bottom, the red and green coming together, and the very flat candlestick pattern up top. Those are all signs of losing momentum here, and this is a great example of using those all together, which is what you'll need to be learning to do. The second trade here kind of answers a question I got from a reader or viewer just a few days ago. He asked me, did you ever get into a trade, then get out of the trade quickly, and then get back into it again? That's exactly what happened on June 29th. This is the same chart we're looking at just a moment ago, where I shorted at 98.41 and covered again at 98.43 with that $4.50 loss. You can see the market opens at 9:30. It starts shooting straight up. Now, part of my interest in the market this morning is because the news media is bantering everywhere about states closing down again and a second wave of COVID-19. And you've heard all the headlines before. And so the media was hitting it pretty hard this morning. So I wanted to watch. Now, I usually don't trade at 9:30 when the market opens. I wait and give it a little bit of time to settle down before I do. But on this particular morning, I made an exception. You can see what the market's been doing since I've been talking. It went all the way up to 98.50, and now it started a downtrend, and you can see the red and green lines down there are once again appear to be diverging. We'll wait and see what happens here. But after several minutes of watching this, I decided I would go ahead and try that same trade again. And this time I'm going to sell the NASDAQ100 Micro Emini. And we'll see how this trade progresses as we try it again, so to speak. At 9:33, I decide to pull the trigger, 9:34 actually. And market's already moving in my favor here. Okay, we're short one contract, NASDAQ100 Micro Emini, 98.21 1/4, and we're trading down at 98.11, 12, somewhere in that area. Take a look here, and we're $15 to $20 up, about 1 minute into the trade at 9:35. Remember, we went short at 9:34. Make a note of that. We're up about $20 now. Now, of course, it is at the market opening, and you never quite know what's next. So where I'm from, they say $20 is $20. I'm going to put in a stock market order at 98.10. Remember, I'm short around 98.21. So now I have made my worst case scenario on this trade is that I will make $22 if I'm stopped out at 98.10. Of course, I prefer the trade continue downward from here, but we'll see what happens. All right, we're up about $40 now. I never take my eye off those lines at the bottom. Here we are, 3 minutes into the trade, 9:37. The red and green lines down there seem to continue diverging. They're getting the difference between them wider and wider, and that vertical green line there from the zero line is getting longer. That expresses that divergence on what's going on here. Now we're at 9:37, 3 minutes into the trade, and we're up about $107, $113 there, we'll call it, at 9:41. And around 9:41, 9:42, our divergence is still going strong, so we continue to monitor the trade. Now, what you're going to see me do next here is to bring that stock market level down just a little bit. It was 97.80, remember? And now I'm going to move it down to 97.75. You got to stay after that thing. I'm trading down at 97.52 now, and my stop's at 97.75. That means my worst case scenario now is I'm going to make 92.50. It's a delicate balance, but you got to stay after it because you've got $142 in unrealized profit now in 8.5 minutes. You don't want to give up any more of that than you have to. We're trading 97.52. That's about 25 points away from our stop at 97.75. You remember when I put in the stop there, 97.75, we were about 25 points away from the market price. Now the trading has moved down, so I'm going to adjust my stop again here because I want to keep as many or as much of that unrealized profit as I can. Now I'm getting a little more aggressive at 97.50 is where I'm placing the stop at this time. You can see I'm up $151, but the market's trading pretty close to my stop now at 97.50, and bam, we're stopped out right there. So we covered by making a closing purchase at 97.50, and our profit is $142.50 in 14 minutes. Now, your brain always tells you to strive for perfection, and you want to not leave any money on the table. At 6 minutes after I left the trade, the market was down to 97.30, so there's another $40, 20 points on the table I did not capture, and that's okay because there's no such thing as perfect trading. And no matter what you do, you're always going to second guess yourself. Oh, if I had just stayed in for a moment, the green and red lines were still far apart. Yes, all that's true. But don't pretend that you know what's going to happen next, because you don't. You cannot get rid of that uncertainty. There's no technical solution. There's no mathematical solution. There are things that we have no control over, and we have to make decisions before we think we're ready. And that's the trick to learning about trading. Now I'm going to repeat some of that because I think this is probably the most important thing in any video on the channel here that I can tell you. You have to make decisions before you're ready. That's an inherent paradox in trading. I could have made $170 on this trade if I'd known when the perfect time to close it was, but you never know that. I could have handled it a lot differently. Why didn't I take the $170 profit? I'll tell you why. It's because the number one mistake in trading is taking profits too soon and letting your losses run. Well, can you determine by technical or mathematical means the exact decision you can do? No, you can't. That's why your brain gives you analysis paralysis. You keep looking for a solution that isn't there. You cannot know the unknown unless you have a time machine where you can jump forward and come back and make all the perfect decisions. And life is like that too, as we all know. But what you have to do is be able to learn to make decisions without having all the information. Now, that's difficult, and a lot of people believe in the Easter Bunny. They think you can always know, or there's some mathematical formula or technical means by which you can tell the future and pop it in right. There's thousands of people who'd love to sell you that secret for about $5,000 or $10,000. Put your hand on your wallet, run the other way, because it doesn't exist. As I say often, it's Easter Bunny territory. I just don't want you to make the mistake of not making decisions at a good time instead of waiting and thinking you might know the best time, because you won't. That's just an inherent paradox and a part of trading, and I feel that I must stop the video here and say this and talk about for a moment how important it really is. There's a really good chapter in my book, in chapter 6 on trading psychology. Right now, I want to show you one of the drawings from that chapter. You know, when I was growing up, I had a kind of a wicked aunt, and she would tell me, "Donald, you're a good-looking young man, you know. You are special." And then she would peek over her glasses and frown and say, "Just like everybody else." Well, if you thought you're the only one going through the trader's emotional roller coaster, I'd like to officially welcome you to the club, because it happens to everybody. Every time you start off a trade, we'll go left to right here, you got to have optimism to pull the trigger on any trade, right? Then you get excitement, you make a little money, and it's yet unrealized, you get thrilled, and then you start to think, well, I'm a genius, and euphoria, I'm going to be able to do this every day. Then your unrealized gains and your hope have been given up. Now you're in denial. Well, it's going to come back, and then it doesn't, and then you have fear, and then you have desperation and panic, and finally you surrender, and you take a big loss on the trade. Then you're despondent and depressed, and then eventually you start another trade, and the cycle starts over again with optimism. Now, this phenomenon happens so often and to virtually every trader that the psychologists, the real trading psychology experts, have given it a name of its own. It's called disposition, the disposition effect. And you can read about that and much more in the chapter on trading psychology and my book. I wrote the book so I could make it faster and easier for people to learn how to day trade these micro E-minis. And the proceeds from the book I use to produce the videos on this channel, and that way I can support more videos to keep coming back again. By the way, hit the like button if you want to see more videos like this one. When you hit the like button on my channel, it means, yeah, I want more videos like the one I'm watching now. I would appreciate that. Have a great trading day. This is Don Singletary, and I hope every day is a payday for you.